Hello everyone, welcome to Options with Doug. Streaming on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also on Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics on my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X, formerly known as Twitter. My name there is @Pless. And if you're active on X, I have been posting a couple of times a week at least. Please take a look. If you like what you see, give me a like, give me a follow. Here are the key tenets to my approach to trading. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures. And certainly in the equity index futures, S&P 500 and the NASDAQ, and the large cap tech stocks, the Mag 7 stocks that I follow and trade. And for the S&P 500, SPX is the underlying index. SPY is the ETF version of that index, and ES, the ES futures, that's a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. And NQ, the futures, that's a derivative of NDX. And when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned to the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as their directional bias. So again, many traders may use fundamental analysis or technical analysis. I certainly look at charts, but this is the basis of my approach to trading, positional analysis. I believe this is forward-looking, looking at how traders are positioning themselves in the market and how those levels change from day to day. That indicates sentiment, again, how they're positioned in the options market and what they're expecting for prices, whether they're expecting prices to increase or decrease. So again, that's the basis of my analysis, my planning process. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Stephen. Welcome. Glad you're here. And hello, everyone else. Welcome. Glad you're here as well. Here's my agenda for today. First of all, I want to cover news items, economic data, events, and earnings for today, yesterday, as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today, and then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's start with news items, economic data, events, and earnings. So first of all, yesterday Tesla reported earnings after the close. Initially, there was a bullish reaction to the earnings. We'll take a very close look at Tesla to see how traders were positioned to the options market before the earnings, and then take a look at the reaction today and see what options traders were doing. And also Meta reports earnings after the close today. So we'll take a look and see how traders are positioning themselves in Meta before the earnings report. Also today, durable goods orders did come out at 8:30 a.m. Eastern Time. And durable goods orders, not much of a market mover really, were greater than expected and also greater than the previous release. And for the rest of the week, again, Meta reports earnings after the market closes. Tomorrow morning, GDP reports. The GDP report is at 8:30 a.m. Eastern Time. And then there's a 7-year note auction at 1 p.m. And then on Friday, the big data release of the week, the PCE data at 8:30 a.m. Eastern Time, and Michigan Consumer Sentiment at 10 a.m. All right, so that is the news items. Let's move on to positional analysis now. I'm going to start with the SP 500. This is the ES Futures and Bookmap. Before I take a closer look at this chart, I want to take a look at a higher time frame. I'm going to take a quick look at SPX, that's the underlying index. Going to start as always with a one-day chart. This is SPX. 5-month rally began last year. That's shown by this green rising green line. Currently, SPX is in correction. So that was a one-day chart. That was in Thinkorswim. Let's take a look at a 30-day 1-hour chart. This is the top of that green trend line. High for SPX right around 52.65. This correction began April 1st. Looks like now SPX is trying to recover, starting with expiration Friday, last Friday. That was the April expiration. All right, let's take a look at the levels on this chart. First of all, the dashed purple lines. I'm going to have to shrink this just a little bit. Here we go. All right, for some reason I can't do that. All right, for some reason it's not letting me scroll on this chart. So anyway, the lower weekly expected move is down below. You can just barely see it right here. I'm sure you can't see it, but I can see a little bit of purple there. So anyway, dashed purple line showing the lower and upper weekly expected move. So there's the upper weekly expected move. So SPX is trading above the upper weekly expected move. So that is the dashed purple lines. Again, SPX above the upper weekly expected move. That's based on the options market. The closing price for SPX from last Friday, those levels remain in place for the entire week. Then the dashed blue lines are showing the lower and upper daily expected move. That's also based on the options market, based on the closing price for SPX from yesterday. And SPX looks like it's right around in the middle of that range. All right, so those are the expected moves. Let's take a look at the Spotgamma levels now. Those are shown by the dark red lines. I'm going to point out the key daily levels. First of all, here's the put wall. That's a strike with the largest net negative gamma. Note these levels are proprietary to Spotgamma. They're provided to Spotgamma subscribers. They're available on a variety of trading platforms. Again, this is Thinkorswim, a 30-day 1-hour chart. There's the 5,000 level. That is the put wall. That's a strike with largest net negative gamma that can be expected to act as support. That's also the absolute gamma strike. That's a strike with largest absolute positive and negative gamma, so that's where most of the gamma-weighted open interest is concentrated. The put wall level did move up from yesterday. So this week it has moved up from 4,900 to 4,975 yesterday to 5,000 today. All right, the next level up is the volatility trigger. That's VT at 5,075. That is Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. So it looks like SPX is trading right at that 50.75 volatility trigger. And then finally, and that level did move up from yesterday as well. And then finally, the call wall at 5,100. That's a strike with the largest net positive gamma that can be expected to act as resistance. So pretty narrow range here in SPX with the floor at 5,000 put wall and the potential ceiling for price at 5,100, the call wall. All right, so again, volatility trigger and put wall both shifted higher. All right, let's wrap up our view of SPX with a 1-minute chart. So this is showing this reversal of the correction that began last Friday. This is showing continuation from Monday in this shaded portion on the left. So this is Monday, Tuesday. Now it looks like some consolidation yesterday afternoon and today. Now SPX trading again above the upper weekly expected move and right at the volatility trigger there at 50.75. That level did act as support earlier today, with the 50.79 gamma level acting as resistance. All right, let's go to Bookmap now. In Bookmap, I have my own cloud notes, so I can show SPX levels. There's the volatility trigger, 5,075. There's the 79.0 gamma level up just above that. So I'm showing SPX levels. I'm also showing SPY levels. There's the SPY volatility trigger at 505. And note support today was right around the ES, lower daily expected move. I do calculate that differently or separately from the SPX, lower daily expected move. There's the upper weekly expected move for ES. So support right around the lower daily expected move. Also the SPX 50/50 level noted as support in the Spotgamma AM Founders Note. And the SPY 507 level acting as resistance earlier today for a short setup earlier. All right, so I'll talk about setups in a few minutes. So those are levels in play for today. And for SPY, the volatility trigger also shifted higher. So slightly bullish, shifts higher in the key daily levels for the S&P 500. All right, let's take a look at NASDAQ now. So this is the NQ futures in Bookmap. I'm going to take a quick look at the underlying index charts. I'm going to go to, first of all, QQQ. Earlier today, 429 acting as resistance. Here's the volatility trigger at 426, acting as support earlier today. Then the 427.0 gamma level, acting as resistance. Now QQQ recovering back above the volatility trigger and the 0 gamma level. I'm going to skip over it. Well, let's take a quick look at NDX. There are a couple levels in play for today. And for NDX, 500 is a large gamma 2 level, 17,500. Acting as support earlier today. And then 600 is a large gamma 3 level, acting as resistance earlier today. All right, let's go to Bookmap. So the key levels here, this was actually the upper daily expected move for NQ. Note again, I have my own cloud notes. That upper daily expected move acting as resistance. Price moves lower than 429 acting as resistance. Price moves below VWAP, below that 600 large gamma level, and price moves lower. I might have mislabeled that. I'll have to check on that. All right, so anyway, series of lower highs below VWAP, and we'll take a closer look at the setups in just a minute. All right, so those are the levels in play for the NASDAQ. Let's wrap up our positional analysis by taking a look at gamma notional, see how market makers were positioned at the gamma curve at the beginning of the day. This is gamma notional market makers position on the gamma curve at the beginning of the day for the S&P 500 and the NASDAQ. That's what I look at. Note these numbers, with the exception of NDX, which is really quite small, are still negative, less negative than yesterday. In a negative gamma environment, this indicates that traders are long puts, market makers are short puts, hence the negative gamma. They have to trade in the direction of price. And note these numbers for the last 3 days have all become, they're still negative, but less negative every day. So less negative Monday, Tuesday, and now Wednesday. And again, it looked like the index charts that we looked at, it looks like the NASDAQ and S&P 500 were trading above their volatility triggers now. So if that continues, I expect these numbers to become even less negative or maybe even positive tomorrow. Shifting from negative gamma to positive gamma. So let's take a look at the Vanna model to get a graphical look at what this may mean. So this is the Vanna model for SPX. What this chart is showing is delta notional for SPX, market makers delta notional on the vertical axis, spot price for SPX on the horizontal axis. There are two curves on this chart. Light gray curve shows how market makers delta notional may change with changes in price. The purple curve adds implied volatility to the equation. That shows how market makers delta notional may change with changes in price and implied volatility. So what this is showing is, let's say if price decreases, implied volatility increases, market makers will have more delta notional to hedge than is predicted just by the price-only gray curve. All right, let's take a look at some prices on the chart. So first of all, the high of the day, just after the open, was right around 5,089. So that's right around here. And the low of the day was 5,047. All right, so as price was falling earlier today, market makers delta notional was increasing. And they had to sell futures to hedge their delta exposure. This is typical in a negative gamma environment. Now as price is moving higher, market makers delta notional, so price moving higher, market makers delta notional is decreasing, and they can buy back their short futures. So they're trading in the direction of price, both down and up. And so there's some put Vanna fuel in the tank for a move up. Right here, put Vanna rally, put Vanna fuel contributing to that sharp move higher. We'll take a closer look at that in just a minute. All right, let's move on. Let's take a look at some setups now. All right, so just one thing to point out. Again, in a negative gamma environment, it always is a good idea to take a look at that gamma notional in the Vanna model to see how market makers may react to changes in price and implied volatility. All right, let's take a look at some setups now. I'm going to start with the S&P 500. Let's see what options traders are doing today. All right, so I'm going to start with the S&P 500. So everything that we've looked at so far, other than Bookmap, is based on static data. That's what I use in my planning process. Spotgamma takes open interest data. They apply their algorithms to that data to come up with the levels that I'm showing on my charts. Now let's move on to execution. Look at real-time data. So what this chart is showing is options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. This is in real time. Options trades, market maker hedging activity. And again, this is the HIRO signal, HIRO, hedging impact real-time options. The white curve, or white line, is showing price for SPX, and the purple is the HIRO signal. That's showing options trades, market maker hedging activity. A falling HIRO signal indicates traders are taking negative delta options positions. They're buying puts and or selling calls. A rising HIRO signal indicates they are taking positive delta positions. They're buying calls and or selling puts. All right, so it looks like kind of two main setups today. One was a short in the morning. I'm going to zoom in on this chart. Note initially the HIRO signal moved up, then started gradually making a series of lower highs as price was making a series of lower highs, or price was making a series of lower highs as options traders, as the HIRO signal was making a series of lower highs. And really the easy setup was to wait for confirmation. That was I guess the most conservative setup, right around 10:30. So let's go take a look at that. Go to Bookmap. So here we know that the HIRO signal is making a series of lower highs. 10:30. ES again makes a lower high below VWAP. So good entry point, conservative entry point for a short. Then below the 50.79 zero gamma level. The volume dots in Bookmap are showing market buy minus sell. Green volume dots indicate more buyers than sellers. Magenta dots indicate more sellers than buyers. So as price moves below VWAP and below the 50.79 zero gamma level, aggressive sellers start to come in. Price moves lower. Cumulative volume delta, shown by the dark blue line, starts to move lower. Also, sell stop orders fuel the move lower. That's shown by the falling yellow line. Also, the on-chart indicators, the small red dots. Note all the aggressive sellers that come in as price moves lower, all the magenta volume dots. Secondary entry at the SPY 505 level. Looks like there were some limited sell orders in the order book. All right, now there's been a sharp reversal starting about 12:45, right at the lower daily expected move. Aggressive buyers start to come in, and you can see all that now. Magenta volume dots on the way down, green volume dots on the way up, hardly any magenta volume dots on the way up to this move. Let's take a look. Let's go back to Hero now. Let's see what options traders are doing. Note the reversal in Hero. Starting right around 12:35. Hero starts to make higher lows, higher highs, and price responds, about 10 minutes later or so, 10, 15 minutes later, price responds. So a nice divergence long setup. All right, let's take a look at NASDAQ now. I'm going to take a quick look at puts and calls just to see what traders have been doing. I'm going to have to jump back to avoid the auto zoom. So it looks like in this short setup, they were buying puts from the open. That's shown by the falling blue line. Then they started selling calls right around 10:30, 10:35. In that case, then the orange line, blue line were moving in the same direction. It's a very powerful directional indicator. So it looks like the call sellers took their foot off the gas right around 11:45, started buying calls right around 12:35. Also 12:35, they started selling puts. So now the orange line and the blue line are moving the same direction. Again, very powerful directional indicator when the put line and the call line are moving in the same direction. All right, let's take a look at NASDAQ. I'm going to, first of all, take a look at the signal that I normally take a look at. This is the Mag 7 signal. Let me show you what this is. So this is another combined signal showing options trades and market maker hedging activity for a combined signal of the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. And this line normally this is what I look at for NASDAQ. These 7 stocks are large drivers of price in the NASDAQ. Sometime it can be a little bit misleading, like today. So let's take a look. All right, so initially the Mag 7 Hero signal was moving higher, leveled off, and then really started moving higher around lower around 11 a.m. Not really providing much of a directional indicator for price. So if that is the case, if I see such a large divergence in the Hero signal and for Mag 7 and the NASDAQ, I look at a couple places. First, I take a look at Nvidia. Nvidia is a very large component of the Mag 7. So this explains some of that move higher. Nvidia initially moving higher, also setting up a divergence short. A little bit difficult to interpret today. All right, so let's move on to the NASDAQ signal. Much easier to interpret today, much more meaningful in terms of price action for the NASDAQ. This is a combined signal for QQQ and NDX. So this is showing options trades and market maker hedging activity for QQQ and NDX. And again, when traders buy and sell puts and calls in those two index instruments, market makers hedge their delta exposure with NQ futures. All right, so much more clear signal here in NASDAQ today. After an initial move higher, the NASDAQ signal started to make a series of lower highs. So let's go to Bookmap, go to NQ. Reversal at the upper daily expected move. Whoops. Very strong clue that a reversal was coming. So aggressive buyers, green volume dots on the way up, magenta dots on the reversal lower, then a series of lower highs, and again, now, just like the SP 500, NQ breaks below VWAP, so that's shown by this light blue line there. Also the 17,600 level. And aggressive sellers come in. CVD, stop line, both moving lower until just before 1 o'clock. And then aggressive buyers start to come in. Note that large traders were fading this move down with iceberg orders. That's shown by this rising light blue line. That's pretty typical behavior for large traders with iceberg orders. They will buy weakness and sell strength. So they have been buying this move down, rising light blue line. Now they have stopped buying, and it looks like NQ may be finding resistance at the NQ 700 level. Also VWAP. All right, so let's go back and take a look at Hero. All right, so it looks like the Hero signal for NASDAQ is leveling off, or actually starting to move down now. So we know large traders have stopped buying with iceberg orders. Options traders starting to take negative delta positions again, and NASDAQ finding some resistance now. All right, let's take a look at some stocks. So the first thing that I want to take a look at is Tesla. Again, Tesla reported earnings after the close yesterday. There was a very bullish reaction to the earnings report yesterday after the close. Continued today. So Tesla did gap up today. All right, let's take a look at, I want to take a look at Equity Hub. So this is based on options trades for options positions for yesterday. So this is Tesla. I'm showing the put call impact chart. And the blue line is showing the rate of change of gamma. The orange line showing the rate of change of call gamma. So put gamma, blue line, call gamma, orange line. Remember, Spotgamma assumes for stocks that traders are either long calls and or long puts. So there is no positive gamma for market makers. They're always going to be short gamma. That's the assumption for stocks. All right, so this is showing that put gamma is dominant. The blue line lower than the orange line, put gamma, is dominant throughout the price range shown on the chart. So put dominated, and you can just see by the size of the blue bars showing put gamma notional much larger than the orange bars. So looking for a very high rate of change of price in the range of price from around, let's say 130 to 180, where those lines are the steepest. Again, remember, put dominated. Also, let's take a look at history. So this is from yesterday. Note for Tesla from yesterday, the hedge wall, call wall, and put wall all move lower. So that's bearish. So traders were positioning themselves somewhat bearish yesterday, or overall during the past few days or weeks or whatever, and that did move more of that yesterday with the hedge wall, call wall, and put wall all moving lower. All right, let's take a look at today. All right, so today in Tesla, the price reaction initially was lower, and all that did was set up a good entry point for a long. And the reason I say that is because traders were taking positive delta positions from the open. That's shown by the sharply rising orange, blue line, purple line, sorry. All right, so speaking of blue and orange, let's take a look and see what they were doing with puts and calls. And they were clearly buying calls. That's shown by the rising orange line. So again, flow alert right at the cash open. You see the orange line rising. Sorry. Let me jump back to Tesla. So again, that quick move lower, all that did is set up a long. And I did post that in Discord earlier today. So making up a great, setting up a great long in Tesla. So let's go take a look at Bookmap now. Go take a look at Tesla. Let's zoom in. Sorry, just trying to adjust the screen. All right, so quick move down. Trend break. Couple of tests of the 160 level. Good entry point for a long. And Tesla moves up about 3 points, pulls back to 162, just above VWAP, and then moves all the way up to almost 168. Absorption at that level. Buyers are exhausted. Some aggressive sellers start to come in. Note all the green volume dots at this reversal. So there were some magenta volume dots on the way down. Then aggressive buyers start to come in. Price moves higher. So good long setup in Tesla this morning. Watching Hero, watching what options traders are doing, specifically call buyers, that was your clue to wait for a long setup. And there it is, right around 945, right around the 160 level. All right, let's go back and take a look at Hero. All right, this is a very classic pattern. Aggressive call buyers. That did not last long. As soon as they take their foot off the gas, Tesla starts to move lower. Call buyers definitely driving price. Also, they started selling puts. That's shown by the rising blue line. And then they took their foot off the gas as well. And price moved lower without that fueling that move higher. So when traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. We'll zoom in on this. All right, so again, this rising orange line, your clue to wait for a long setup. All right, let's take a look at Meta. Meta reports earnings after the close. And I'm going to shift back to the total signal. I'm going to have to jump back to avoid the auto zoom. All right, Meta, traders definitely taking negative delta positions, buying puts and selling calls. Hero signal down from the open. Flow alert signals significant options activity. So you see the alert, see the moving, the purple line, the hero signal falling. You're looking for a short. So let's go take a look at Bookmap. Go to Meta. And let's zoom in just a bit. So Meta breaks below VWAP. Good entry point for a short. Meta likes to make pretty deep pullback, so 505, 501, 500 is the key gamma strike. More deep pullbacks. All right, so great short setup in Meta today. Note cumulative volume delta falling all day. Let's go back and take a look at Hero again. All right, so it looks like options traders finally took their foot off the gas right around 12:45. It looks like price started to move higher about 35 minutes before that. Let's shift back to puts and calls, see if that gives more clarity. All right, so it looks like I'm going to have to jump back. So it looks like the call sellers slowed down. Looks like they do continue to buy puts. That's shown by the falling. The blue line continues to follow. All right, so this reversal not as clear as Tesla. All right, let's take a look at one other stock. Then we can take a look at some other stocks you may have in mind. Shift back to total signal. This is Coinbase. I'm going to jump back. All right, let's zoom in on this. Great divergence, short setup, divergence. Hero signal moving lower from the open. Flow alert gets your attention. Hero signal continues to make lower highs. And then it took about a half an hour or more, maybe 40 minutes, before price really started to move lower. So that is a divergent short. And conservative entry right at 235. That's the call wall, key gamma strike. As Hero continues to make a series of lower highs. Let's go to Bookmap. All right, remember 235, call wall, key gamma strike. All right, so we know that Coin was making a series of lower highs. Test of VWAP and also the 235 call wall key gamma strike. Price moves lower, trend break, breaks out of this wedge pattern. This line right here, that is the correlation tracker. That's showing correlation with Bitcoin futures that I have right here. Let me show you what that is. That is the correlation tracker. So I've set up this correlation with the Bitcoin futures. You could use, for this, you could use, if you have spot Bitcoin on your chart, you can certainly use that. This was just easy for me. I already have already connected to the Rhythmic CME exchange. So I'm just using Bitcoin futures. So if you only have DXFeed, for example, you could use one of the Bitcoin tracking ETFs as well. Or any user of Bookmap can connect to one or more crypto exchanges. This was just easiest for me. All right, so we know that traders were taking negative delta positions from the open. And this is showing that Bitcoin started to move lower. Trend break and entry right there at VWAP and 230 and the 235 call wall key gamma strike for a move lower. Hello, Caesar. Welcome. Glad you're here. All right, so those are the stocks that I had that I wanted to take a look at. Great long setup for Tesla in the morning. Clearly signaled by options traders. And then shorts in Coin and Meta, again, clearly signaled by options traders. And for, in the case of Coin, as well as the Bitcoin futures. All right, let's check the index. And again, if anyone has any stocks they want me to take a look at, please let me know. I'll be glad to do that. Interesting, the Kenobi wants to take a look at Snap. Sure, I'll be glad to do that. This is interesting that the 5079 level, that was kind of the break point of this move lower, now acting as resistance again. All right, Kenobi wants to take a look at Snap. And Elizabeth wants to take a look at MicroStrategy. All right, so I don't have either of those in Bookmap. We can take a look in Hero. So let's go to Snap first. Oops. All right, so bearish options trades here, hedging activity in Snap today. Falling purple line, falling hero signal, float alert comes in just before 10 a.m. So about a 50 cent move in Snap, but lower, down to the 11 hedge wall. And it looks like Snap has found support at the hedge wall at 11. And options traders took their foot off the gas around that level. All right, so Kenobi, there you go. If you like to trade lower price stocks, that was a good one, a good short today. And you're welcome. All right, let's take a look at MicroStrategy. Oops. All right, so somewhat like Coinbase, a little bit of a move up, except Coinbase was divergent short, but initially traders are taking positive delta positions, take the foot off the gas, start taking negative delta positions, price moves lower, put wall down at 1250. So it looks like MicroStrategy has leveled off as the slope of the hero line has decreased now. Now they've taken the foot off the gas. So again, both Coinbase and MicroStrategy very heavily correlated to the to Bitcoin. Again, let's go back to Coin. So Coin, a little bit easier to read today with this divergent short. Price action pretty similar, move up, showing the strong correlation to Bitcoin, and then the move lower. Except the options traders in Coinbase, I think, were a little bit better prepared for the move lower. All right, let's go back to MicroStrategy. But still resolving the same way down. All right, let's check the, remember we saw resistance at the 50.79 gamma level. Let's zoom in on this afternoon. This is the S&P 500. Hero signal moving higher. Price reaches above the 50.75 hedge wall up to the 50.79 gamma level. Hero signal is levels off. Flow alert comes in, signaling a significant shift from, in this case, positive to negative. And very good reversal signal, mean reverting signal in this case, setting up a great short at 50.79 gamma level in the S&P 500. So Kenobi asked, does Hero work if you look at a 5-day chart, or is it most effective for daily analysis? It is, I think it's most effective for a daily analysis. That's how I use it. But just to note, you can look at 5 days worth of data here. So you can look at, you can set the start date back to, this would be last Thursday. So in this case, this is 5 days worth of data for the S&P 500 combined signal. So this does provide some additional insight that traders have been basically taking negative delta positions starting yesterday, 23rd, as price has been trying to recover from right around the 49.50 level from the correction. Notice how price is leveled off as the hero signal has started to move lower for the last couple of days. So Kenobi, to answer your question, yeah, it does. Very effective for a 5-day chart. So thanks for asking that. This is very interesting to take a look at. Again, starting on the 22nd, price trying to rally, recover from right around 49.50. And starting yesterday morning, traders net started taking negative delta positions, and price now is consolidating. And Elizabeth, you're welcome as well. All right, again, Kenobi, thank you very much for asking that. This is very interesting. Definitely provides some insight. All right, so now let's just take a look at today. Let's take a look at NASDAQ. We'll go to the NASDAQ signal again, so just like the S&P 500. NASDAQ signal reversing lower right around 145. Let's go take a look at Bookmap. So ES reversed right around the SPX 5079 level. NQ at the 17th NQ 17,700 level. That's shown with the red there. Also VWAP acting as resistance. Now back down to the 426 volatility trigger and the 17,500 large gamma level. Note the 700 level was support earlier today. All right, let's take a quick look, see if there's any setups. So we missed the short setup in NASDAQ and ES as hero signal reverse lower for both the NASDAQ and the S&P 500. Let's take a look at, see if there are any alerts. All right, so the latest was NVIDIA. Let's zoom in on this. So the signal for NVIDIA was right around 130. Flow alert. Just about 10 minutes, the hero signal shifts lower. Let's go take a look at NVIDIA. All right, here's the short setup. Let me zoom in on the volume dots just a little bit. Trend break. Short right around 815. And now these levels may be old. I did not update these levels today. I'll have to check. Trend break, reversal lower. Another hero signal comes in. Another chance for short at 805. Then a quick 5-point drop down below 800 now. Let's go back and take a look at the hero signal. I need to update those levels. All right, so those levels are still correct. 805 is the hedge wall, and 800 is the put wall key gamma strike. Let's zoom in on this. So the flow alert came in right at 226. The latest flow alert. Zoom in. All right, so if you reacted immediately, you would have about 7 points. If you took a short immediately at 805 at that flow alert, good for about 7 points move lower in NVIDIA at the 805 hedge wall. now down below the 800 key gamma strike. That's also the put wall now. All right, everyone, my time is up. I want to thank you very much for watching. Thanks for your questions and comments. And Kenobi, great question about the 5-day chart. Very interesting. All right, remember tomorrow GDP, and then Friday PCE data, Michigan consumer sentiment. And we'll talk about it on Friday afternoon. All right, everyone, again, thank you very much for watching. Thanks for your questions and comments. And I will see you on Friday. Bye.